like it doesn't take much for like the stocks to go down and the Bitcoin to keep going at a current trajectory. And a lot of people are talking about Bitcoin going after gold.
Welcome back to the show, everyone. Bitcoin is on fire, as you know, breaking 100K. ETF inflows are breaking records. But the question is, what does this mean for Ethereum, altcoins, and for you? Well, on the episode today, Seb from Aquanow is going to show you the charts, the flows, the insights that are essentially driving this market. So if you appreciate this type of information, please consider supporting the channel by subscribing, like the video, and let's jump right in.
I mean, look, it's not going to surprise anybody. The election, created a huge spike in crypto markets more broadly. The story, was, ETH still lagging relative to its recent highs, whereas everything else was kind of printing all-time highs. ETH still very far away from its all-time high, but closing in on the peaks that we saw earlier, earlier this year, late last year, kind of thing. So, something to keep an eye on. We'll talk a little bit. Talk a bit more about that too. I'm coming from a derivatives background, so I like to look at the options market to kind of see, and it's pretty interesting. We'll see a slide in a sec here that shows open interest, so the amount of like total contracts written on Ethereum as very high, higher than it's ever been. And so when you engage in a derivative transaction, there's a market maker behind the scenes that's taking the opposite side of that and then doing some hedging activity. And so when implied volatility is meaningfully different than what the actual volatility of the underlying asset has been, that's something to keep an eye on, because it just kind of shows that like maybe market makers are a little bit not stressed, but like kind of full up on what they can hedge or what their balance sheet can manage. And that's kind of what you're seeing in ETH, where like it's implied it did jump, of course, especially towards the end of the month, but its implied volatility also shot up higher, and it's like currently like in a negative stance. So it's just an interesting kind of like dynamic there, where market makers are maybe a little bit full up on ETH right now. These are cool slides here, so you can get access to this stuff on like far side for free. I like to use the Bloomberg just because it's easier to pull into Excel. But after the election, Bitcoin ETFs saw just huge inflows. Saw the best month ever in the inflow space, and like really there hasn't really been many outflows, which is a really notable thing here as well. Like we've had some pretty meaningful pullbacks over the course of the Bitcoin ETF's existence, and even still, the net flows have been resoundingly positive. And of course, like this one popular, people like to talk about this, but Bitcoin rising the ranks of global asset, rising the global asset ranks, and if it keeps going higher, like it's rapidly going to like surpass like Google, Amazon. It doesn't take much for like the stocks to go down and the Bitcoin to keep going at a current trajectory. And a lot of people are talking about Bitcoin going after gold. We'll see. Like I think the guys at Parafly, maybe, I think it was a podcast I saw with Empire. That was one of their like 2030 predictions. So taking the bold call to look 5 years out is always tricky to do in crypto, but one of the things they said is that's in challenge. I saw like maybe Kobe may have tweeted something similar recently. So but yeah, anyways, this is a really cool chart, I thought. Like, look, BlackRock's gold fund is not like the gold fund. Like S&P Spider GLD is like the bigger gold fund here. And there are to do this analysis really justice, I'd have to look at like all of the gold funds versus all of the Bitcoin funds. And even then you'd have to like tease the data a bit more, because there's some like just paper gold and like all that kind of stuff like that. But all that to say is like BlackRock's the biggest asset manager in the world, and the growth of their Bitcoin fund has been like just tremendous, and it now eclipses the value of assets in its gold fund quite meaningfully. And obviously we don't see much of that slowing down anytime soon. So why that's interesting is like obviously BlackRock has an army of investment advisors out there. They're all investing according to different investment policy statements and that kind of stuff. And just really interesting to see that like within that kind of world, the assets which really follow creation of ETF units, so money coming into the ETF, has surpassed its gold fund, which that's a pretty awesome chart, I think. And then, like, I think I saw some of this chatted about on the in the NSC chat, or at least for sure elsewhere, like the whole MSTR thing. I know a lot of people were like, sorry, what's that? Pardon me. I know a lot of people like see something like this and they get remnants, or maybe like some PTSD from what happened last cycle with like Luna and 3AC and all that kind of stuff. It's very different. A couple cool things here to remind yourself of is MSTR is a publicly listed company, and so its debts are going to be like, unless it's doing like outright fraud, its debts are going to be its financial statements are going to be publicly released on a quarterly basis, so we'll know about its financial health. And then really like $4 billion in debt on a $90 billion market cap is really quite small. I think I saw some like reports or something like that for Bitcoin would have to fall to like $2,000 before you have like a forced selling of or before like the debt would be of equivalent size to its Bitcoin holding. So trade MSTR stock at your own cautiously, because when there are major gaps between like fundamental value and market cap, there can be some problems. So nevertheless, that's something to keep an eye on. It's more of just like a story that I thought it was, it couldn't really not publish the chart pack without mentioning it. But here's another thing that's pretty interesting. Like, look, kind of, I think Jackie was alluding to this earlier. It's like, things can't go up forever. You'd have to expect some natural pullbacks, and like with the Bitcoin market value to realized value, or MVRV, this is a very closely watched metric, by traders, just to kind of give you an idea of like how much profit people are sitting on. And so, when it gets really crazy to the upsides, typically when, market tops of cycle has actually, has a really good predictive ability with respect to calling market tops. And then, so we're not really near that, but you can see it's kind of like a localized top in terms of where we might be. And so that's something to keep an eye on. And so, you'd expect some consolidation period, I guess. And then to Mikhail's point, during that period, what tends to happen is Bitcoin dominance comes off and you start to see like altcoins rally and stuff like that. And something that I don't have any quantified or quantifiable evidence for, but I will say, like, anecdotally, I know a lot of people do this, is in a bull market, when you're trading, you often will you'll crystallize, instead of going to like a stable, what people will do is they'll go to something more stable. So they'll sell their torquier assets for stuff like Bitcoin. It actually had been Ethereum for a long time, but I know a lot of traders who when ETH wasn't doing anything, were like, ah, shit, I got to do something else with my like, when I try to like rotate into something, because I want to catch the market bid. And so if I'm selling, some DeFi tokens or whatever else, trading that back into ETH will protect you in the sense that like ETH should go down less than like Uniswap token in a downward market. But if your timing is wrong and there's this general trend upward, you're still going to participate in the upside. And so I think you'll see. What I know for sure is that a lot of people who used to do that with like alts and ETH have now switched back to doing that with like alts and Bitcoin. And so you probably will start to see a bit more, maybe some more. Volatility and dominance, or something to keep an eye on anyways. This chart is awesome. Like this one and another one later on is pretty insane, but like the number of ERC's 20 stablecoin transfers to exchanges was just like off the charts last month. So like 14 billion, and it's like obviously like 3x of the closest month, or almost. And so again, that just kind of shows like fresh money moving to exchanges to then go buy alternative assets. And so it's a very healthy thing to see. ETH not to be left behind in some of this stuff. Like, I think it took a couple days, Bitcoin stole the show and then Ethereum kind of followed. And I think there's been a couple days recently where the Ethereum inflows have outpaced the Bitcoin inflows in the ETFs anyways. And so something to keep an eye on. And, maybe the ETFs start to kind of shake off some of the cobwebs of the start, and, start to see a little bit more reflexivity of price to inflows and stuff like that in the space. It's the ETH narrative has been challenged. Of course, that's well documented for anyone on Twitter, but I think it's pretty still holding in there really well. And $1 billion of inflows in a month is still really good, and we'll see if we can kind of keep that momentum going. That's the open interest chart I was talking about before. So like that could be both long and short. Like in this case, it's just like general interest and leverage on ETH, whether that be long or short. What I show in the next chart is that if you look at funding rates, that's clearly positive on like more crypto native venues, but on the CME, you'll see that we're still negative, less negative than before, but like there's a lot of like traditional financial firms or like, people who have like multi-strat funds who are doing this basis trade where they will long the asset, short the future to get the funding rate that way. And that's still prevalent here. But, not as negative as you've seen it in the past. So there could be some people who are using, futures to go along as well. It starts noisy. I'd seen it published, and I thought I'd put it on here too because it's kind of interesting. Like in the past, when the price of ETH, this is the log price, so really if it goes up, it's just the rate of change that's increasing. So it's like a acceleration. In the past, that has like when it has accelerated higher, you've seen people move ETH to exchange to sell. That hasn't really happened for a long time, except for this most recent kind of like dip up higher. So there's definitely a healthy community of hodlers in ETH. Maybe some people getting a little bit impatient on this most recent dip, but actually I know some people who are just waiting for 3,000 to sell, and now they feel like idiots. But nevertheless, that's what makes the market. But interesting to see like this kind of behavior change. Going back to the narrative side of things, like I kind of take a pretty like agnostic view. I think there's a lot of really interesting blockchain projects out there, but when people were like super negative on ETH, I don't know. I just kind of have to really kind of point them to charts like this every once in a while, where like it's things. Maybe it's got some bumps in its roadmap along its path here and there, but like we've seen fees come off dramatically and transactions increased hugely in the L2 space. Of course, Base is leading the way there, but like it's working as was intended, right? Like if traders are getting frustrated or whatever else about the ETH price, that's like something different. But like it's there's a lot of times in the world where if you're a CEO, you get paid in the stock, so yeah, you're trying to move the stock price, but like you got to manage your business, and so sometimes the flows of the market can be a distraction, and then I think that's kind of what we're seeing in Ethereum. We track the most institutional grade money market pools it depends on which, like across the crypto, I guess. So this is like pools of like north of $1 billion in assets, stablecoin pools, that is. And then we kind of like aggregate their rates as in a weighted average to try to like track like what we would call like an opportunity cost of capital. So like if you're investing in crypto and you're not at least earning that weighted average rate, then you're underperforming, we think, because it's like you could just take your capital and invest it in institutional grade stablecoin pools and earn at least this. So it's kind of like it's kind of like a benchmark rate, like the risk-free rate, which I don't want to get too nerdy on finance stuff like that. I don't think it's a perfect proxy, but pretty close in terms of opportunity cost of capital. And so September things got kind of bottomed out and then have since rebounded nicely. And then we closed the month north of 10% there. So that just shows there's like a real demand for credit. It shows like a healthy crypto economy, something to keep an eye on. And then this is a new metric. I don't know, I just threw it in here because I hadn't seen it before. I don't know if like Dune rolled it out. I think they rolled it out recently. It's like their on-chain adoption metric. They have a bunch of different ones. You can go there and check them out for free. It's pretty interesting just to keep an eye on over time. They track different things and normalize them for just for people who are maybe not wanting to pay for a subscription, but you can just check it out for free. So obviously, no surprise to anyone, on-chain adoption has risen with price. That's weird. There we go. So Solana versus Ethereum, kind of going back to that thing. I think you can like Ethereum and Solana both. I think there's some people who get a little bit crazy on tribalism, but I mean, call it meme coins, call it unsustainable, but that is insane, that chart, right? Like, just total dominance, by ETH. ETH is also going up, so it's not like it's necessarily a market share stealing, but like, Sol stole the show last month when it came to DEX volumes. That was just like a huge no performance, and it's pretty interesting to see from a ecosystem that was kind of deemed dead. Of course, as I said before, things are happening. It's interesting things are happening in Ethereum land too, and I think Base is obviously stealing the show there. Really interesting to see Aave kind of take share on the DeFi lending side of there. And I don't know. I look at crypto like I look at traditional financial markets, for better or for worse. And I think you really want to see healthy credit markets to like underpin activity in an economy as well as like in a blockchain ecosystem. And it's good to see this transaction ratchet higher. Be really cool to see when this thing breaks a billion, maybe in the next handful of months. This is a chart that I like. I'm actually going to write a longer form piece on this, I think, at some point, about how, like if you look at Tron, it may depend. You may have your own views on the Tron ecosystem or whatever else, but like, from a economic standpoint, it's pretty steadily earned more revenue in transactions than it has paid out in fees. Now, maybe it can manage that, based on some centralization, but nevertheless, that's really interesting to see. Obviously, the token price has done insane lately, but take that for what you want. However, and this is not like, I'm not trying to like dump on Aptos here, but it's really interesting to see that like they've been just paying out a ton of emissions and have no revenue. So that's like longer term, that's going to be a big problem, and you would not want to like theoretically, you don't want to be investing there. But things could change very quickly in crypto, so I'm not like, again, like trying to dunk on Aptos here, but like they're paying out 50 times their revenue in token emissions. That's sustainable. And then this is the thing I was watching actually, and I'd almost published it last month, but I didn't. And it's really interesting to see. So with the appreciation of ETH and then a lot of those DeFi assets, TVL, I think is actually almost maybe at an all-time high a couple days ago, but it increased dramatically. But what was something I was watching was RWAs as a percentage of total TVL. So like RWA growth, independent of broader crypto growth, going up. And I was like, oh, this is really interesting. Let's see if we can kind of hit all-time highs. And then of course, like, at the end of the month, there's just this absolutely face-ripping rally in DeFi tokens and ETH that kind of like brought this to totally reverted that trend, but something to watch longer term. I think normalizing trends for stuff like this is really important, and so it's cool to see. Stablecoin transfer volume printed an all-time high last month, over $2 trillion. That includes Sky, but even if you look at the centralized stablecoins, USDT and USDC, was a huge win. Now, I think this chart on the right here, and maybe I'll do like I'll write something about this too, but USDC versus USDT's relative transfer volume like really like shot up meaningfully. And it's like pretty crazy because you think USDT has a massive leg up in terms of supply out there, and there's different theories around what's going on about like why that is, but I mean with all that USDT minted, you're seeing way more USDC transferred than USDT in recent months, and that's pretty interesting. And I think it's really interesting in the context of maybe in the narrative of that like USDC is more institutionally friendly, and then that chart I showed before where you saw that huge amount of stablecoin assets flow to exchanges. So I don't know, like, I don't think it'd be crazy. I'd be up for having the debate of like, okay, so you see a massive inflow of stable coins to exchanges to start to get active, and then this new increase in USDC relative to USDT transfer volume. Maybe that means that, maybe that's proof that the institutions are here, right? Or that this is more institutional flow into the blockchain ecosystem. Again, like you'd have to, do more work to triangulate that, but that's kind of my takeaway. I think it's really fascinating. Obviously, you have to talk about these two trends. Pump.Fun, this is not perfect, but if they held on to all their SOL and then just valued it today, that's $350 million of revenue that they've earned in like the last year. That's freaking insane. Like for a startup, like wow, like we're seeing crazy stuff happen in crypto markets right now. And then virtuals is obviously way earlier, but in just a short period of time, they've earned 8 figures, and that's really interesting. Something to keep an eye on for sure, which you guys all know, but good to put it in the charts. I saw this somewhere else, but I just recreated it. Really positive to see the incidence of DeFi exploits decrease over time. Like if it had popped up this month, then that would have been really discouraging, because it would have just been like, oh, this is just related to a good point, Mikhail. I know this isn't near to your heart, but if it popped up this month, then you're just like, oh, this is just related to price, but that's not the case, right? So I think we are kind of entering a phase where this is a maturation in a picture. You know what I mean? Like the ecosystem's getting better. We're not perfect yet, but that's what an amazing trend. So look, October. I'll tell you guys that for those of you who don't know this, like it's really hard to kind of look at venture deals because you don't always announce as it kind of happens. Like we've got a lot of deals that we've written checks for, they're papered and all that stuff that haven't announced yet formally. So people time that for different reasons and all kinds of stuff like that. It's like you kind of there's a marketing angle to this. But anyways, in October there was a ton of deals announced. That they had been done a long time ago. In November you saw another healthy nearly 1.5 billion deals announced, which is great. It's just really good to see. And then a lot of those are in the seed stage still, pre-seed still dominating the later stage. I think that there's a real case to be made that we'll start to see some shifts in this in like a 6-month period, especially if like the big funds in the US feel like they could start investing in these projects without going to jail. And then it's also interesting to see M&A go through, right? I've seen the headlines, and I've talked to a few projects that are like, up for sale, where people are tired. They're, they built through, the bear. They're like, oh man, just like, I just want to get out. And, and so you're starting to see that happen, with older projects, as well as with, some that are relatively newer, but who got a bid and were like, yeah, I'll just take it. I'd like to go work on something else, or take some time off. And then this will take a sec to load, but like infrastructure continues to lead the way. We in our fund, we invest in infrastructure, but we actually don't invest in L1s and L2s. That's definitely the one that kind of like pushed these guys to the forefront last month. But you are still seeing like dev tools and SaaS and that kind of stuff get some capital. And then wallets deep in dev platforms are also gaining. And actually DeFi, right? Pretty interesting to see. I think Noble was the big one there, the Stablecoin project, and they got a big raise that kind of pushed them there. But another thing I didn't mention here, but gaming number 3, like, I don't play games, but I've always been interested in that narrative. But I think that's pretty interesting to see, right? Gaming come through, as getting some big checks. You could see, after being washed out for a long period of time, there's this kind of like, these cycle charts that you can see where, trough of enlightenment and all that kind of stuff like that. Like, I don't know, it feels like, there's been some big wins in the gaming space, and we might see some more of that. So